question later. But Mr. Troy, if you want to start by just telling us a little bit about your background and what you do, and then we can take it away and go into the slides.
Sure. Okay. Thanks. And everyone can hear me okay? I'm assuming, Patrice?
Yeah, we can hear you. We can hear you great.
Okay, great. So hi everyone. My name is Mike Troy, and I am one of the partners at the Geekdom Fund, which is a local venture capital fund. So what venture capital does is we basically raise money from investors, and then we look for different startups in which to invest. And so the topic we're going to talk about today, I think, is very, very relevant to my background and my day-to-day job. And so we're going to go through sort of how you craft your ask, and I'm going to try and give you all a little bit of perspective from the investor's point of view, because I think it's important for you to understand that as you're developing your pitches and your asks. That there's you have a very specific audience that you're targeting, and that audience is generally looking for a set of criteria to evaluate those investments, and they vary somewhat investor to investor, but we're going to talk about some of the really common ones that most investors are looking for.
Perfect. Thank you. Okay, so I will present screen.
Okay.
Let's see. Over here. Okay, perfect. And then whenever you're ready, we'll just take it away.
Okay, so I guess let's go to the second slide. And Patrice, I can't see the slides. I don't know if that's because I'm the one doing the talking, but can everybody else see the slides okay? Yes, I'm assuming that's a yes. Okay. Okay, great. Okay, so as I mentioned when I was just starting off the call, let's talk a little bit about what investors are looking for from their perspective. So let's go to the next slide. And so at the risk of just being sort of overly simplistic, investors are looking for good investments. And how do we define good investments? I think, sort of a very generic definition for that would be some investment, a company that we invest in that ultimately we think will return a multiple of capital invested. So, if we invest $100,000, we are looking to get some multiple of that back in the future, and a lot of things, how much we get back and what the timeline is can depend very much from investment to investment, but that's pretty much what all investors are looking for. And if you want to just convince yourself of that, I think it's pretty easy to convince yourself of the opposite, that if somebody was pitching you on an investment where you were going to invest $1,000 in their new business, and 2 or 3 years from now they were going to return you $50, that would not be a good investment. If they were going to return you $50,000, that would be a good investment. So let's go to the next slide. We can kind of hop through some of these pretty quickly, but so we're going to talk a little bit about, from the investor perspective, sort of how we evaluate investment. So the next slide. I think one of the first things that a lot of investors will look for is some definition of what is the problem you are solving. And I'll just say that this is something that's very common when you're getting a startup to pitch you on their idea, to get sort of a lengthy monologue on what it is they're doing, the app they're building, the technology they're developing, whatever it is. And really, I think what a lot of investors are looking for is they want to know, what is the problem you are solving? Because the problem that you're solving is going to give a lot of context to everything else that we're going to talk about today. Okay, so if you can be very specific about, like, what is that problem, what is that pain point, then that gives us really something that we can use to evaluate the rest of your solution, your market size, everything else that we're going to talk about later. So again, I have in the slides here is different than what you're building, okay? That comes later, but we really want to make sure that we can dig in on this problem and that you can clearly define what it is. Another thing that we look for here is the bigger the problem or the more painful the problem, the easier it is to convince somebody to buy it, and the more they're going to be out there looking for that. So there's kind of an investor motto, which is, you want to invest in pain pills and not vitamins. Okay, so a pain pill solves a real problem. If you have a headache, man, you want that, you want to get a couple of Advil or an aspirin or something like that and make that headache go away. Taking a multivitamin, yeah, we all know that's good for us, but it doesn't necessarily solve an immediate pain point. So the more you can define that problem right up front, the better. Okay, let's go to the next slide. Okay, so after you define what that problem is you're solving, then the next thing we're going to want to know about is like, how do you solve it? And so this is where you can put in your description of the solution or product, okay? And I have a little hint there to include mock-ups, screenshots, etc. Anything you have, if you have a prototype, that's great, but anything you can do to help sort of bring your solution to life. And I know a lot of you are just getting started. Maybe if you're working on an app or a software program, you may not have much to show yet, but that's okay. Like, go ahead and just whatever you can do, even if you are, is everyone familiar with the term mock-up, which is just basically like a mock-up or a drawing of what a screen of an app might look like, or sort of like a flow from screen to screen might look like that's okay. It's just anything that you can do that helps the investor sort of visualize what it is you intend to build or what you have built. It's super, super helpful. Okay, so the next slide. So how big is this problem? So this is going to go to feed directly into what is the size of your market. And I'd say that this is another area that we see a lot of startups make mistakes. Again, you want to be as specific as possible about your market, the market for your product. So an example of like a mistake that we might hear is that somebody is, let's say they're making organic gourmet dog food, fresh dog food, something like that. And they'll start off by saying the market for pet products is $500 billion a year. Okay, well, the market for pet products includes gourmet organic dog food, but it also includes a lot of other things. It includes cat food, bird feed, leashes, chew toys, everything, right? And so you really want to be specific about the actual market that you can address with your problem, or with your product, and that will typically be a subset of a larger market. Okay, let's go to the next slide. So this is a really, really important slide. It's very rare for someone to pitch us an idea where we've never heard of or never seen a product that does something similar or might even solve the problem in a different way. So you really want to make sure that you can convey to the investors what makes your solution different. What differentiates it or distinguishes it from the competition. And I'm just going to give you another little hint here, is that oftentimes saying that something is lower cost is really not what investors are looking to hear. Products that distinguish themselves by being cheaper, that's something that's not actually, in many cases, not that difficult for a competitor to respond to. And so they lower their price and you're forced to lower your price, and it becomes what we call kind of a race to the bottom, and really makes it tough to build a sustainable business. And I think another question that you're going to hear, at least I heard a lot last year from some of the judges in the pitch competition, is, how is that differentiation sustainable over time? So, an obvious answer to this is that you have a patent, which basically creates a moat where it's difficult for a competitor to sort of knock off your product or do something similar because you have legal protection that stops them from doing that. But there's lots of ways that you can create a sustainable competitive advantage. And many times in software and a lot of technology, patents are just really not that productive in terms of a route to go down. And what you really want to look for is, what are the things about your products? Like, could it be that once somebody is using your product, it makes it very difficult to switch to a new product? Or brands and things like that can be a very sustainable competitive advantage. So if you think of things like, if somebody wanted to launch a new cola product, for example, like a soda, it would be very difficult to compete with the brands that are already on the market. And when people walk into a convenience store, assuming they start doing that again, and they see a Coke on the shelf and your soda is right next to Coca-Cola and in between Pepsi, and they've never heard of you before, that just becomes a very difficult barrier to overcome. So really think about, like, what is it that makes your product different? Does it have features that your competitors don't have? Does it address a problem in a different way? Is it better? Is it faster? Lots of ways to do that, and we can maybe follow up with some questions about that later. Okay, let's go on to the next slide. So why is now the right time? Not all of you may have a slide like this in your deck, but if you do, I think that this is, again, something that we really look for. So what are some of the trends in the market that you can leverage? What are some other things potentially that are going on? These can be technical shifts in the market that will just really put a lot of wind in your sails. So if you think about things like, Rackspace, when they were growing their hosting business here, there was a massive migration for businesses from software that was hosted on premises to software that was hosted in the cloud. And that was a massive technical shift, and they were able to leverage that to grow a really large business. If you think about a company like, for example, Uber or Lyft, it was a massive adoption of smartphones and the capabilities inherent in those smartphones, like GPS and messaging and things like that, that really allowed them to grow that business very quickly, and also would have made it very difficult to launch Uber 10 or 15 years earlier, because you just didn't have that penetration of smartphones in everybody's hands. So again, if there's something that you can leverage, you definitely want to include that in your deck. So something else that we could talk about right now, another trend that's going on right now, so to speak, is the COVID-19 or coronavirus. So, this is something I think that, we are at least recommending to all of our startups that are out trying to raise money that they address this head on, that you actually talk about how your product or service or business is going to survive in the current climate. I think everybody expects one day we'll have a return to normal, but in the interim, it can make it very difficult for businesses to survive. So a good example of that would be, if you were thinking about launching a restaurant, like right now would be a very difficult time to do that. However, if you were launching a takeout business, this might be an excellent time. And so you want to really think about, like, what are the trends that are going on in the market, and how can you leverage those to basically add some fuel to the fire for the growth of your business. Okay, next slide. And I don't know, Patrice, do you want to take a break and see if anybody has any questions?
Yeah, that's perfect. Does anybody have any questions, or has this made you think about Johannes? You have a comment? Go for it.
Hi, I'm Johannes, and I'm from Giving Back for Good. We are an online clothing shop, or a second-hand clothing shop. So okay. I like what you said about the COVID-19 trend right now. And I was talking about this with my dad, and he said that at least we are in a good situation because maybe people are not going to afford to buy new clothing. So he suggested to use this as our trend to work, because we resell clothing for a cheaper price, and there's our market.
Right.
Do you have any comments towards this, please?
Look, yeah, I think, obviously with everything going on, I think the consumer is, speaking generically, the consumer is going to be really impacted. I think budgets are going to tighten at various households. And so, yeah, I think that's a reasonable hypothesis or explanation for how what's going on may actually be a benefit to your business. Now, I think the one thing you have to be careful about, though, is you can't really just cherry pick all of the pros. I think you'll need to address some of the obvious cons to your business model with what's going on. So, for example, if you're reselling secondhand clothes, is that dependent upon somebody coming in to the store and either selling you their used clothes, or how do you access that inventory? And also, how do your customers find you and browse your secondhand clothing collection in this type of environment? Do you have a website? Do you ship clothes to people to try on? How are you going to? So I guess the point there is, like, you can't just look at like one point. You have to look at more like the totality of how it might affect your business, and don't just cherry pick like what you think the benefits might be. Does that make sense?
Yes, sir. Thank you.
Okay.
Does anybody else have any questions that you want to ask now before we move on? Okay.
Okay.
We'll keep going.
All right, great. So so next slide here is something I think all investors want to know is, how will you make money? This is what is your business model? This might be a place that you can insert some of your financial projections. So obviously, we are investing in companies to get them up and going, but at some point we being investors are expecting businesses to become sustainable, which means that effectively they become profitable. And so I think right up front, you need to address, how are you going to make money? Is this going to be through the sale of an app, the sale of a product? Is this going to be through advertising? There has to be some kind of revenue stream coming into your business, and you have to convince the investor that over time that revenue stream will grow such that it's able to cover the cost of the business, the operating costs of the business, and that you can become profitable and basically self-sustaining. So, be specific about how you intend to make money. If you know something about your financials, either from kind of a revenue and a cost perspective, I'm not sure exactly which of these other topics you've already covered, or the unit cost of your product, like it costs you $5 to make it and you sell it for $20, and so we can look to see what sort of gross margins you have there. But be specific about how you intend to make money, and the more supporting evidence you can provide for investors that show them that over time you can become self-sustaining, it's just a much easier decision for an investor to make versus a company that we don't see any path to profitability, and we figure that you're going to be continually raising money. Okay, let's go to the next slide. Okay, so who's on your team? So, most investors are making investments in companies that they don't actually intend to operate. So you have to convince these investors that you are the right people, that you have the right team to operate this business. Many times what we're looking for there is we're looking for something, like we want to understand a little bit more about you. We want to understand a little bit more about your background. We want to know if you have a connection to or experience with the problem that you're solving. Many times, some of the best solutions to problems tend to be very nuanced, which means that they are, if you are not intimately familiar with that problem, you may not quite understand exactly how to solve it. So if you are solving a problem you're familiar with, if this is something that a problem that has frustrated you and potentially you went out to the market and you looked for solutions and you couldn't find one, I mean, these are all good things to tell the investor. And it's something many investors are listening for intently, which is that somebody had a personal experience with the problem, that they went out to the market, they could not find a solution, or they tried several solutions and none of them were really that good. And so they went off to sort of like on a personal mission to create this product or company to solve this problem. So to the extent that you can sort of weave that into your pitch, I think it just makes it that much stronger. Okay, let's go to the.
I've got a quick question here.
Yeah. Sure.
Just if that's okay. So we did, Chris Burney, when he came, he did a great job, and we talked a little bit about, selling who's on your team. And I think when I've seen pitch competitions with people outside of beyond high school, they talk about their experience, their professional experience. How can our high school students sell themselves as team members? And then my second part to the question is, do you think this is better done at the beginning of the pitch or as kind of right at the end? I've also seen teams pitch before.
Yeah, okay, so two good questions. So I think, so obviously when you're getting pitches in sort of a professional environment and people have had careers and things like that, it's a little unfair maybe to compare it to kids that are still in high school. But I still think that there are a lot of problems that you may be aware of that you have some sort of personal connection to. So I think I would kind of highlight that. If there are particular skill sets within the team, I know, many students might be technically savvy. They may really understand social media and how to market a product through those channels. They may have been, I remember one of the pitches last year, Patrice, was from, I think it was called, was it Boa Constrictor or something like that? Right, and so it was, obviously the person doing the pitching was a student, but he was really good at conveying that he had sort of like a very firsthand experience with the problem, and that, it gave you some confidence as an investor that the solution that he came up with would actually work. So I think that, as you look to your team, this is a time, I think, when you can cherry pick some highlights and really try to describe, like, what is it about your team or your experience that might lend itself to being sort of like making you the right team to solve this problem. And I think whether the team comes at the beginning or the end, these are, it depends. I've seen it both ways. Many times when there's a very, very strong team, they put it on the first slide. If it's a team that has had multiple successful startups in the past, or a tremendous amount of experience in a particular industry in which they're solving the problem, they will highlight that right up front. Or I've also seen it put at the end where what they really want to focus on up front is the problem, the solution, the market, and all of that. So it's really it's kind of up to you as to where it goes.
Okay, thank you.
Okay. Any other questions at this time? Okay, so so let's go to the next slide. So crafting your ask. So I think, Patrice, if I'm not mistaken, they have sort of an exercise after this, right? Where they're going to get to sort of develop this, and they're going to basically ask for some amount of money to fund some development of their product or idea. Is that correct?
Yeah, what I was hoping for after today's lesson is that teams could go away, and I know it's a quick turnaround and we're not all together, but it'd be really great for them to have time to think about what their startup costs are and how they create that ask and go through the process of doing that. I know they had time with you and Mr. Girdley last year to kind of do some of that pitching experience. I would like for them to be able to see some and get some feedback and hear each other's feedback. So as we are really getting close to the end here, and they'll do final pitches one way or the other, what does that look like? So that's what I want the takeaway to be for tomorrow's session, is let's do some practice runs.
Okay, perfect. Okay, so so as part of that ask, there's sort of a template to make sure that you you don't beat around the bush, and you get right to the point in terms of what exactly investors want to know. So let's go to the next slide. So you know, the first thing you're going to need to know as part of this developing this ask is, how much capital do you need? So here's some very specific language. The company is seeking X dollars. Okay, so some amount of capital. You're the ones that know. You know, we don't know what that number is. You know what that number is. If you need money to develop a prototype, you know, hopefully you've come up with some estimates, or maybe talked with some different places that can develop a prototype for you, and you have a good idea of what that number is. Just some quick advice based on some things I remember from last year. This is always done in round numbers. Like I remember seeing a lot of, like, you know, we need $3,472.27. So just kind of keep it at a round number. It just makes it's easier for people to get their heads around. So, so you know, you're going to want to look through your budgets that you've developed to come up with that number. And I think also, you know, you need to be prepared to defend those numbers. So you have to be able to show us not just the answer, but the work and how you got to that. This is frequently called in sort of investor lingo, we would call this sort of a use of funds. I'm sorry, excuse me. This is the total amount you need. The use of funds is the next slide. Why don't we go to that one next? So how will you spend it? Okay, so this is called a use of funds. So this means, like, exactly, you can ask for a specific amount of money, but we do want to know how you are going to spend that money. Okay, so if you need $1,500 and you need $1,000 to develop your prototype, you need $200 to launch your website, and you need $300 to run an initial marketing campaign. You know, we want to know in rough numbers how you're gonna spend that money, and what are sort of the buckets that you're gonna kind of categorize those costs. You know, many times it's done either with sort of a graph, like a pie chart or something like that, that lets people know sort of how you're going to spend this money. But again, be specific, but we don't, you know, don't bury people in details. Like, if it's going to cost $1,000 to develop your prototype, I think it's okay to say it's $1,000 to develop a prototype. You don't have to go into some bill of materials for, well, it's going to cost, you know, $72 for the plastic and $100 for the mold, and you know, $300 for the person's time. I mean, really, we're looking for this in sort of like rough, high-level numbers, like how are you intending to spend this money? So next slide. So so one of the big things I think that investors are looking for, once you've asked them for or told them how much money you need, told them how you're going to spend it, is we want to know, where is that money going to take you? Okay. And typically you'll see this done. A lot of people will talk about it in terms of time. Like, this money buys us, you know, 12 months of runway or 18 months of runway, which is fine. We kind of want to know, like, how much time is this buying you? But I think the other thing we really want to know is, like, where's this money getting you in terms of milestones? Okay. What is this money allowing you to do? So in the previous example, if somebody's asking for $1,500, and that, you know, you want to let them know that, like, this is going to let us develop the first version of our prototype, launch our website, and launch our marketing campaign. And so anything you can do here to sort of quantify where this money is going to take you from the development of your product or service, like, that's really helpful for us to understand. Okay, so it's going to get you this many customers or this many users, or you're going to be able to do this with your product. Like, let us know that, and be as specific as possible. And I don't know if you guys are going to really go into this just yet, but another big thing that investors always want to know is, how are we going to be paid back? So what is, I don't know if they've covered the topic of exit strategy or not yet, but if not, I think this is, at least a good time to start thinking about, like, what do you intend to do in the future to ensure that the investors are actually receive this money that you're thinking that they're going to get out of this investment? And that typically takes the form of something like a sale to another strategic investor. It might be a sale to a financial buyer. In many high growth companies, they're targeting an IPO or initial public offering. So, how do you think that one day you get out of this business? So, for example, if you go back to that example of the gourmet dog food, maybe your exit strategy is to sell to one of the large dog food brands like Purina or something like that, where this might be a natural fit for their product line. So start to give some thought about, like, who might one day be an actual buyer of not just your product, but your whole business. Okay, so next slide. So yeah, so I think the assignment for tomorrow is to be able to craft your ask and be ready to pitch that tomorrow. I don't know if we're going to take volunteers or what, but work through. I believe you have a kind of a worksheet that lets you help sort of like develop what that looks like and some guidance for how to think about it. So I think that'd be a good thing for everybody to work on tonight. And then if some of you want to kind of bake in a little bit more in terms of if you have started developing some of your pitches and you want to talk a little bit about, what is your problem that you've identified? What's the solution that you're thinking about developing? What are your initial market sizing estimates and things like that? We can talk about that as well.
That's great. Another question. So let's say, I can think of a question that some of the students might have. Let's say that my startup costs are $2,000, but I'm able to ask for up to $10,000. What is your suggestion of what to do?
Look, I think that it's always good to ask for a little more than you need. I think some general guidance I could give you that has almost always played out in almost every startup we've ever invested in is that things take longer and cost more money than anyone initially thinks. And so I think that to the extent that you've got a fixed amount of money that you can ask for, you need to be able to justify what you're asking for, but you may try to turn the question around a little bit and think about it in terms of, what could we do with, if you thought you needed 2,000, maybe ask yourself the question like, well, what could you do with 3,000 or 4,000? Like, what else could you do?
Mm-hmm. Okay, that's a good question. All right, guys, who else has questions about this? Specifically about the way, you might have questions about what the assignment is for tomorrow. What we're really asking for you to do is look at your startup costs and then think about, and I'll post these slides as soon as we get off the Google Meet. I'll post the slides and the worksheet, but really you can just go through and talk and think about crafting your ask. What do you need? How are you going to spend it? And I thought that was great advice from Mr. Troy about how you can say prototype development and you can maybe highlight what that includes. Don't forget that y'all will also be turning in to the judges ahead of time. We'll figure out logistics, but an investor packet. So they will have the details and the breakdowns in their investor packet. So you don't have to read line by line and costs because that will be something they will have. And then, so how much do you need? What do you need it for? And then what will you be able to achieve with that? You don't have to address necessarily, unless you want to, your exit strategy or how they're going to be paid back, because we're not asking for any of the funds back. If you get 10,000 or 8,000 or 5,000, or maybe we do it differently this year because I'm sure things are going to look a little different in the end. That's a grant given to the team members that are continuing on to pursue this business idea. So you don't have to include the paid back section. You can talk about an exit strategy. you know, maybe I think about like Leaf, like your original idea was we're going to start with our clay pigeon and then we want to go to this next. You might talk about how after we accomplish this, we want to go on to that, but I don't think it's necessary. So that's what we're asking for you to do tomorrow. And of course, you would need to start with your elevator pitch. Would you want to see any quick financial overview before they go into their ask, Mr. Troy, so you have an understanding? Or just do you want to focus on the crafting the ask piece?
Do they have, yeah, if they have financial slides and they want to just throw it up ahead of time so we can kind of see what went into to see if everything's kind of making it into the right bucket, sure.
Yeah, we just did that. So we've just seen all their financial slides. And so this would be coming right after that pretty much. So it would just be another, it would be good for us to have a visual tomorrow. Make sure you can just add them to your financial pitches that y'all shared with me Monday and Tuesday. Just add it to the end of that. So questions, I saw somebody had a question. Let's see what it said. Are there sign-up times? So what I think we'll do for tomorrow is I'll probably take some volunteers, but I'll also probably call on some teams randomly as well, because I think it's good for us to, one, all be ready to pitch no matter what. And then I think it's also good for us to see some people to get us started off that are comfortable and ready and want to do that. So if you want to go for tomorrow, just go ahead and send me an email tonight saying we want a chance to pitch, if you want to be one of the teams that make sure that you get a time to pitch. Because I know some of y'all didn't get financial feedback when you signed up for office hours this week in the end, and this might be a good chance for you to get that feedback. Other questions? Okay.
Okay.
Yeah, I thought that was great. I mean, it was really straightforward, and I think it made a good point. I will say, I do remember Mr. Herrig last year really saying when he came back this year that one of the main things they focused on in deliberations at pitch night was scalability. And you touched on that a little bit. Do you want to just kind of close on, is that what you focus on most of all?
So I mean, it's a good point. And I think, like I said in the beginning, I think different investors look for different things. You know, obviously, so venture capital is just one type of investor that you may seek out. And typically, you know, we being venture capitalists as a whole fund a very small percentage of the overall deals. And one of the things that we are looking for is companies that can scale very big, that can get, you know, very, very big, and are addressing, you know, large problems in big markets. You know, these are the types of deals we're sort of actively seeking out. And so, yes, we do tend to look for anything, you know, within their business model that may prevent them from scaling or may slow scaling down, or if it's a, you know, if there's something that is inherent to them scaling a business that may, I mean, obviously when you think about software is sort of the ultimately scalable business, right? I mean, you can build something once and you can sell it thousands and thousands of times. But there are other business models that may require things like local offices or things like that. So if you think about like when Uber was rolling out their service, you know, they would have a team that would start, you know, would fly to a new city like San Antonio, and they would office here and make sure they could get sort of like Uber up and running in San Antonio. So, you know, that becomes a little bit more difficult than somebody that's just making pure software. So it is something I think venture capitalists focus on, but is, you know, something that I think if you have that type of business, you're going to want to address.
Perfect. And my last question is about closing. I think last year, kind of the overarching theme as we closed with our practice pitches leading up to pitch night was poor closings. Do you have any tips for how to close after you ask for, you know, you do your funding request, you have your big ask, and then what's a good way to close?
That's a good question. I mean, again, I've seen a lot of different people closing. Obviously, if this is something, look, I think mostly what investors are looking for, all investors they're looking for, a really big, exciting opportunity that they can be a part of. So, I mean, I think to the extent that you can really convey that message to the judges that this is, this is a big opportunity, it is exciting, and you really want them to be a part of it. I think that's, something that maybe makes the connection between your business and the judges, either based on their, I don't know exactly who the judges are this year, but based on their backgrounds or based on the community that they live in as well. Any sort of like personal connection you could make with the judges or a personal appeal, I think that makes for the strongest close.
Thanks. Okay, last chance for questions before we go away with your assignment for tonight. And like I said, I'll post this video. We're missing a few people. I appreciate all of you being here on a Wednesday. I know it's kind of your off day, so I appreciate it. We have a short week this week. I really appreciate that, guys. Last minute questions for what you need to do for tomorrow. Okay.
Ms. Bartlett.
Yes, sir.
What even is the assignment?
Okay, so your assignment, one more time.
Thing, so
Huh?
I was gonna ask the same thing, so it's okay, Harrison.
Okay,
I was
good. All right. Well, I'm glad. Thanks for being brave. And you need to, just in case you didn't catch it, the assignment for tonight is to add on to your financial slides. Kind of maybe you probably only need 1 or 2 more slides to talk about your funding request. So this is crafting your ask. Here, I'm going to present my screen so y'all can see real quick.
Awesome.
Okay, and this is where you're saying you can ask for up to $10,000. Now, technically, you can ask for more, and we did have some teams last year ask for more. You never know if somebody's willing to give you more, so ask for what you need, and just realize if you're asking for a lot more, we can only give you $10,000. So be ready to defend what you would be able to do with like a phase 1 $10,000. So you're crafting your ask. It's a pitch. It's kind of your closing. How much do you need? What do you need it for? So this is your startup cost. What do you need money to get going? What can you do with that money? So what's that going to do for your company and what's that going to achieve? And then you don't really need to address this, how it will be paid back, unless you want to talk about your exit strategy, if that's part of your plan and how you want and why you think investors will invest in you. And then a nice closing. And I think this is a good time to also practice that closing. Pretend like this is the very end of the pitch. And how are you going to walk away from that and be ready to answer questions? Good question, Harrison. Thanks for asking.
I have another question.
Yes, sir.
Oh my.
Are we doing group pictures like you said, or no?
I have taken some pictures, but yes.
We have to stay and do group pictures.
No, I've already taken some. For those of you that had your cameras on, so thank you.
Did you get my good
Other
side?
questions? Other questions before Mr. Troy probably super busy and has to get back to work.
Are you testing a rubric?
No, I mean, you mean like what it's going to need to include?
Yes.
So that's going to be in the slides, and I'm going to post Mr. Troy's slides right now as soon as we get off the call. I'll post those on Google Classroom. Anything else? And James, if you have any questions, just email me and I'll make sure I've clarified if you'll have questions. Okay. All right. Well, we'll see you guys tomorrow at 2 p.m. Thank you, Mr. Troy.
Thanks, everyone.
All right. We'll see you tomorrow. Thank you.
Okay.
Thank you.
Bye.